Hi there, trader, and welcome back. This is the Anti-Investor Trading Podcast. Let's talk about staying updated in trading and balancing awareness with overload. So it's Phil, welcome back. This is the Anti-Investor Podcast where we talk about trading stock options, index futures, and maybe the occasional day trade or three. My goal is to give you the right tools, the correct rules, software to assist you, a community to support you, and if you will allow me to be a mentor to show you the way so that you get real results in the fastest, smartest possible way. So for many traders, especially those involved in short-term trading, staying updated can be crucial. However, it doesn't mean getting bogged down in the micro events or the tedious reports. A simple, well-balanced awareness is often just enough. So some of the things that you may want to be aware of in your short-term trading is the global market trends. It's a bit of a mouthful, but basically just understanding the broad market movements and the economic indicators. From my point of view, it's as simple as just knowing when the key events are, keeping an eye on the major news, because it can impact the market. The obvious one for the futures market, and most of the markets actually, is the first Friday of every month is non-farm payrolls, and that can move and shake the markets, as can the FOMC meetings, the Fed minutes, and so on. There's a few key events, and what I typically do in my daily emails is at the bottom of that email, I put what I call the red flag news, and it's just those news items that could move and shake the markets. Now, depending on what instrument you trade, you may want to go to sector-specific news. Again, oil, for example, has a report every Wednesday about its inventories. So just being aware of the developments of the sectors that you're trading and that is relevant to your trading is kind of important. But balance that information. Again, for me, I don't want to be bogged down reading company reports, the balance sheets, the statements. While it can be interesting, it isn't really relevant. So just recognize that not all news is newsworthy, it's not tradeworthy. And again, just looking at those red flag news items relative to the instruments that you're trading, know when earnings are out if it's stocks, knowing the sector news, knowing the commodity news, knowing, again, just when those typical events that will move and shake your markets. Again, because what you don't want to end up with is placing a trade 2 minutes before the news and have it whipsaw and yeehaw around your stop loss and trade entry. And, you know, it typically the trade will do what it was going to do anyway, but it can just shake you out of that trade. Now, with that said, on a personal note, I don't have a problem trading through news if I've already got a well-established position that is moving the way that I would expect. So if I've got a dip buying opportunity, Nvidia recently in the news, a dip buying opportunity with Nvidia, you had a well-established strong trend. The whole sector was flowing very, very nicely. And just prior to its earnings, it just dipped slightly. And I was happy to sit through that, happy to sit through the earnings reports. And, we know what happened next. It just took off like a rocket post-news. So it was just the icing on the top of the cake for me for that particular trade, and because it was a well-established trend, a well-established news item, and I was already in a well-established position, so a negative news item wasn't potentially going to hugely impact my bottom line. It wasn't going to stop me out, for want of a better description, for a loss. So some non-conventional approaches that you can also consider is social media monitoring. This didn't used to be a thing, but way back in the day, circa 2006, 7, 8, as some of the forum were being taken over by the more traditional social media that we call traditional today, rather, like Twitter, like Facebook, like some trader-specific websites. Whose names I slip my mind at this moment. StockTwits, that was on. So there's plenty of software out there that actually goes and tracks the the mentions, the chatter, if you like, for social media mentions. Previously, these tools used to look at the amount of times that a headline was mentioned or a stock was mentioned in the news in a 24 or a 48-hour period. So some people find these things useful, either as positive reinforcements or negative reinforcements on a particular trade idea. You can trade it or fade it, for want of a better description, but ultimately it can help you understand the sentiment for that particular stock, or an anti-indicator, as I sometimes like to use these things for when I have looked at them. Again, if Joe Blogs and Joe Schmo, if the general public are typically the last to know anything, why would you want to listen to them? So if the last to know people are talking about and getting excited about something, that's often a time to usually unload your position and unwind, and certainly be looking for the exits, because it normally would go opposite to what the public chatter is doing. And that's just my viewpoint on those such things. But anyway, there's plenty of things out there. You can go and certainly listen to podcasts and webinars, engage in media that may offer insights in a more digestible format. Again, some things that I like occasionally updating myself on what's going on in the markets, but from experts, not from the traditional media outlets, the TVs, the CNBCs of the world, the Jim Cramers of the world. I would rather go to a less heard of person and get my information from someone who's actually putting their money on the hard right edge of the charts, and is also updating people with a little bit of public awareness of what they're seeing and how they're exploring those trade ideas, which is what I like to do for my traders and insiders. I'll explain my reasoning behind everything I'm doing in real time. Very few people actually do that. Again, there's lots of traders with opinions, but there's very few that actually trade who have opinions and trade those opinions or strategies or viewpoints and so on. Automated alerts. What you can do is, if you're a busy person and you've got less time than you actually need, you can actually set up alerts. Google Alerts, for example, is the simplest one for key events that are happening around, just as a little reminder. And certainly you can also on Google Trends with Google Alerts, you can set up when things are mentioned the last 24, 48 hours that may be relevant to your holdings, your investment ideas, your trade ideas, things that you're interested in. You can actually have Google give you a daily digest of things that were mentioned that were newsworthy. So you can really customize these things in today's modern world, in this newfangled technology that we have. Right then, so staying updated in trading is about finding balance between being informed and avoiding information overloads. Again, just on a personal note, I just want to know when certain events are happening, the red flag news. It's not necessary to delve into every minor event or report. So a trader should really focus on the trends, the news that is directly impacting their strategies, and utilize the tools that are available to you. There's so many out there. It's unreal these days, whereas we really had to struggle back in the late 90s, early noughties to find anything that was kind of relevant and timely, more importantly. Again, don't avoid overwhelm, ultimately. And as always, I would certainly avoid 100% of the traditional media. They're typically wrong most of the time. Allow yourself to remain nimble and informed without getting stuck and bogged down in the minutiae of the bullshit that's out there. Or you can just turn it off completely. Whatever you prefer to do. I did that for many years, and I was no worse for it. So if you like what you've heard today, be sure to listen and follow to the very first episode where I map out the first of my 6 most profitable money-making strategies. I will be delving into them, the others in the future, especially my new SPX income system. If you can't wait for the podcast to outline those things, you can go straight to my website. The link's in the description, or you can go to antivestor.com, and ultimately you can send me a message and start the conversation and see if what I do is right for you. But with that said, have a wonderful day. I'll speak to you at the same time next time, and toodaloo trader. Bye for now. Keep in mind that futures, options on futures, stocks and stock option trading involve a degree of risk that may not be suitable for all investors. There is a risk of loss in every investment that you make, and it's your responsibility to assess the risks of your decisions. Past performance is no guarantee of future performance, and Antivestor provides educational information and does not provide financial advice.